What's going on, family? What's going on? What's going on? Happy Sunday. Welcome again to another Stock Sermon Sunday. This is a time for our market analysis for those that are fairly new to this channel or this series. I truly appreciate each and every one of you. Thank you so much for just being here, for supporting all those good things. Let me know down. Appreciate you, Shalita. Appreciate you. If at any time, I don't know. I'm just being very open and honest. I don't know what's going on with the tech issues as of late, but please let me know if you see it going back and forth and back and forth. If it's clear on your side, awesome. That is not your responsibility, but it would truly help maybe if you could just let me know down below. But we're going to continue on regardless. The share screen is going to work perfectly fine, but I want you to see this beautiful shining face so you can see my emotions, my interactions, which should not be interrupted today. But I want to keep the flow going. Our last video that maybe some of you tried to watch, it was freezing. So I deleted it and I just used the same thumbnail and we're just going to talk about it today. All right, we're going to talk about it today on this particular live about last week and continuing into this week. So let me know down below. On and off, but seems to be good now. Okay, thanks so much, Shalita. I have no idea. I haven't changed anything. So tech is, I'll have to Google that and do all that stuff later. But anyways, without further ado, y'all didn't come here to hear me talk about all the problems and all the good things. You're here to get the information and get up out of here. Same with me, so you can enjoy the rest of your Sunday. I'm on PST time on the West Coast, so it's a little bit earlier, as you can see. I've got some light out to the left of me over here. So it is still light outside. It's only 4 o'clock here, so I still got the rest of my evening. For some of you on the East Coast, you're wrapping up, dinner time, all that good stuff. So I want to get you ready for the week and get about, all right? There it goes again. Okay, cool. All right, let's jump into it and get down to business. Get down to business. All right, I'll be checking the chat periodically. So if you are here, I do see you jumping in. So let me know down in the chat and we'll be good to go. What's going on, Neil? Let's go, man. Let's go. It's always good to see folks that are tuning in from the channel. Thank you so much for the comments. I can see you there. So if you're tuning in just from the channel, it's cool to see new individuals that have just found my channel from other places. They're like, man, I don't know who this dude is, but you know, he's giving valuable information. I like his thought process. I like the way he charts. I like the way he has a holistic perspective, whatever it might be. I appreciate the kind words. Trent, what's going on, brother? Hopefully you're doing well. Like the video, gang. Appreciate you. Appreciate you. Appreciate you. Thank y'all so much. All right, let's jump into it. Let's jump into it. All righty. So first thing is first is understanding the sentiment of the market. Understanding the sentiment of the market. Let me make sure we're all good here. Okay, we're good. The sentiment of the market. Our sentiment right now is we are still bearish in the short term, okay? And the question that many people may be having right now is, where's the bottom? Is this the bottom? Should I be buying the dip? I'm getting different viewpoints, different perspectives. And you have in your heart right now a emotion that's going through where, man, I don't want to miss the next dip. I don't want to miss the opportunity. I don't want to miss the big upside. I missed maybe 2022, or maybe I've been holding since then. I missed 2020, that big dip, and it was a rally. I missed Bitcoin at 15,000, whatever it might be. And whether you caught those dips and you've been holding, where's the opportunity this time? And I'm going to just be frank with you. No one knows. So what we can do together here on this particular channel during our time together here is analyze each and every day about the sentiment of where we're going. So fundamentally, I'm going to look at maybe 25 to 30% fundamentals. That means the news, the tariffs, the nature of our inflation data, interest rates. I'm going to take that into account. But where the money's made is watching the price action on the charts, because the price during this time period is telling us a sign based on historical data. So you can see here that for Friday, if you noticed, you can't see here, but on Friday, especially for my new people that aren't paying attention, on Friday we had a recovery, okay? Now, what I want you to pay attention to when we jump in the charts is that recovery looked just similar to our last recoveries, which were dead cat bounces, okay? Dead cat bounces, as I've talked about before, simplistically for those that are fairly new, for those that are experienced, that are on here, have heard these terms, amazing. You may need to simplify it yourself. I just look at it, I'm not going to use the complex term, is when people are essentially offloading their shorts, Okay, they're short positions. They're either shorting the market or they're in puts. Either way, they're offloading those positions, and when you offload those positions, that other side has to buy up that other side. So there's a buyer and a seller. So you're offloading, and then they have to sell out of their position. Okay. So if you have a better term, if you have a better way of doing it, that's perfectly fine. I try to make things simple, keep it simple, stupid. Okay. Because I'm a teacher, educator, and a lot of folks on these platforms just make stuff way too complicated, in my opinion. Okay. So if you ever hear the word dead cat bounce, you'll typically see a big green candle and it'll grind up and grind up and grind up, and you'll think we're recovering. Okay. So as we jump on the charts, I'm going to look at this and show you how we may look this week and to see and to confirm if this is a bottom. Okay. There's a couple confirmation signals that we can see that maybe if this is a bottom or not. So I'll give a bullish case and a bearish case. All right. Right now you can see that the stock market futures are open on Sundays. So you can see that we are down again after hours. The futures are down. They're down on the S&P, and the NASDAQ is down again. So if anyone bought that dip or traded the upside, right, we were looking for a little bit more downside on Friday, but that dead cat bounce kind of caught that little grind up to end the week. All right. So a couple of concerning things that are happening are we still got tariffs on deck. All right. Still got tariffs on deck. And with those tariffs, you have a lot of uncertainty that's still on the rise. Second, in combination with the tariffs, are the inflation data. So we had CPI and PPI reports that came out last week. Those CPI and PPI reports were technically positive. Okay, they came out as expected. Inflation was slowly coming down. However, it still wasn't enough to rally the market. So that was a little bit concerning for me to see that we had positive CPI data and we still kept selling off even more. All right. We've also got Fed Powell speaking with his cabinet. He will be on the deck, on the docket, on the calendar this week, Wednesday at 2 p.m. Eastern Standard Time. So 2 p.m. Eastern Standard Time, Fed Powell will be speaking FOMC, and he will give another decision on interest rates. Now, my prediction, and a lot of analysts out there are predicting that he will probably pause yet again. I don't think we're going to have a cut or a hike or anything of that nature this time soon, because he already paused on the first Fed rate decision this year. All right. So there's still not enough data. He's still a little bit hawkish, meaning bearish, on his decision of whether we should cut even more. So as expected right now, we're looking at maybe 1 to maybe 2 cuts at this time right now. There's a June expected cut, but no one knows. All right. So when there's less rate cuts, along with tariff news, along with, consumer sentiment and the consumer still having to overpay for their normal goods, we have this kind of trifecta of an emotion where the market is still a little bit unstable. Okay. Finally, we have to consider that we were at all-time highs. Let's just keep it simple here. With all the confusion of all those little nuances, the market was at all-time highs for the past 2.5+ years. If you consider the bear market of 2022, that's great. But really, in reality, like 2022, the fall of 2023, we have rallied for almost 2 years, just over 2 years. So we're hitting that point. Now, if you consider 2022 as just a normal bear market, if you consider from 2020 to 2024, we've rallied for 4 years. Okay. So it is due for a pullback, and we are in correction territory. All right. Fear and greed index sitting still right at roughly 15 to 18. It has touched about 20, but that is really what's going on right now. So there's our fundamental data. And to kind of keep it simple for everybody here, if you have any comments on what you see, please put it down in the comments. I'd love to hear your perspective as well. Where I thrive and where we're looking is on the charts. All right. So you can see this after hours here, my ES main, my NQ main, my YM, and my RTY. Those are our futures of the S&P, the NASDAQ, the Dow Jones, and the Russell 2000, our small caps. Okay. So with all those in red after hours, and then you can see here on my charts, SPY, QQQ, IWM, DIA, same thing. These are the ETFs of those futures. They are red after hours. Okay. Now, if you've never traded or experienced an FOMC week, okay, this week is a little bit different because we have another catalyst. It's not just everyone worried about the interest rates. It's now like, is he going to put on more tariffs this week? He already considered those April 2nd tariffs as something as expected. So why am I saying today that is this the bottom? Personally, I don't think so. Okay. And that's what I was explaining in my video that was pausing a little bit, is that I don't think this is the bottom. All right. Here we go. So let's give an analysis over SPY. The first thing I want to do is remove all of these technical signals. And please be mindful, if you're still not in Leverage University and you're liking this content, please hit that like, hit me a comment after this video or in the chat. That'd be wonderful. That'd help the algorithm. And if you want to join Leverage University, there should be a little small discount code if you click on the link down below. All right. Oh, all right. So I want you to take a look, before we put on our moving averages, I want you to take a look at this weekly chart that we have on the S&P 500 ETF SPY, okay? I want to mark this line right here, which is roughly 560, okay? Why am I marking 560 is because this was that retest level from back in July of 2024. When you're looking at whether something is going to have a bullish continuation, whether this is the dip, you typically want a very strong reaction off of the retest level. So ideally, you wanted this to happen, which was this previous week, the first week in March. You wanted that type of candle to happen. But ideally, you wanted some type of follow-up candle that reclaimed, that looked more like this. All right. I'm sorry, that's not centered there, but you get the gist. All right. You wanted some kind of candle that looked maybe a little bit more like that. All right. That would show that we have flipped that candle from red to green and we have reclaimed 575. Okay. So when you're looking at candle structure, you're looking at how that price is reacting around the level that it's supposed to hold up. So for me this week, that's why you're hearing investors saying, I don't know if this is the bottom or not, because we came into this level with still more weakness than expected. Okay. It still pushed through that level. Okay. So if I come into a daily, I want you to look at this candle now. All right. Is this a reversal candle? Maybe, potentially, we don't know. So here's some levels that I want to show you this week that you can go off of to make sure that we are not chasing. And let me be clear here. If you're a long-term investor, you're welcome to buy this dip. This is in correction territory. If this is your first time on my video, we're at 10.36% pullback from the all-time highs. That is correction territory. That is a buy zone. So if you're a long-term investor, you're welcome to buy this dip, but please, as always, I like to always say have at least 2 to 3 additions to your dollar cost averaging. So if you're going to dollar cost average in a correction territory, you better be prepared, even if it doesn't happen, into a potential crash territory. And I always say to my clients or community members or anyone I'm speaking to is I'd rather be prepared for the worst than not be prepared. So if you bought up this dip and you're correct and we're correct and we go back all the way up here to 600, great. You can yell, scream, told you so, all those things, told y'all that was the dip. That's fine. No one really cares. That's just your ego talking. Okay. No one really cares. Everyone's on their own investor journey. So you can be trying to be right all you want. That's not what I'm here for, is to try to prove that I'm right. We're trying to validate the information so you can best invest and be prepared for whatever happens, because no one knows. Okay. So this is correction territory. Don't let anyone tell you that, hey, I don't know if you should buy this dip. We're in extreme fear. Buy it if you want. Okay. Now that's long-term investing. Okay. Pretty simple there. Buying correction territory, buying crash territory, which is down into 520 and 500. Now here is the kicker. Is this the bottom? Now, one indication that I see here is that our RSI on a daily time frame is overextended, and we're starting to see that RSI double bottom and come off of that level a little bit. Okay. Now, some may call it somewhat of a, if I turned on another signal, I don't want to get too advanced here for some folks, but there's another indicator that we can use called the MACD, and we can start to see a potential of what we call a bullish divergence. Okay. A bullish divergence. You can look it up if you want to. I'm not here to teach this whole time. Okay. A bullish divergence is when you have a inverse of the RSI and the chart that is going in a reversal direction. So you have a downtrend and then you start to have an uptrend. So it's diverging from the RSI to the actual chart. Another thing I'll look at is the MACD, and I'm looking for this MACD line, this signal to cross back with the MACD. So that blue line, do you see it starting to cross right there? Look at when it crossed up here, we started to get a little bit more of bearish divergence. Okay. And that's when we started tumbling. So this cross is starting to come back up, right? Which is signaling a little bit of a potential reversal, right? So if I were to say that this week we would need a catalyst. Okay. So here's my idea for this week on SPY. Okay. So those are just little extra things that I like to do personally that gives me a couple of different ideas if we're ready to go, where bulls are going to step back up, where bears may step back in. Here on SPY, I'm looking at roughly this 563 and 565 level. Okay. If you want to make it 566. And I know some of you like when I draw the actual candlesticks so you can see how they look. So there's a possibility for a pullback leading into Fed Powell potentially. Okay. So if we break this trend and we remain below 563 and we start breaking this trend here, there's a possibility for that candle to start coming back. And for those that are in my community, you know what these gray areas are. Those are gaps. Okay. So that is a possibility to come back into the lower end of the range. Okay. So that is one idea. If we remain below 563 and potentially there's still some rejections here at 565, we still could push up a little bit higher and still get rejected right back down. Okay. Because we've already made the move off of the lows with no pullback. So everyone that bought this dip, right, maybe trying to squeeze a little bit more out on Monday or Tuesday, but if they can't, they're probably going to offload leading into Fed Powell. Can I get a 1 in the chat if everyone is following me on this potential idea? Okay. So if I see that, you could do one of two things. If you're trading, this is for my traders, day traders, swing traders, whatever you classify yourself as we're in the community inside Leverage University. If you're in live trading, we'll look at this to see if it's confirming. So my signal would probably be weakness break below 560. Okay. Now, any downside movement, we've got to be mindful that if you do play puts, if you do trade puts, keep in the back of your mind that we have a lot of support that's holding up here. 555, 555, 555, 555. Okay. So to prevent some fake outs, you want to watch Where can I hold my puts if you like to trade puts and you want to get this downside movement? You've got to trade it from level to level. So the first signal is maybe potentially you're confident and you get in a little bit early and you trade it down to 560. And then it breaks 560. And then you're like, oh man, we're off to the races. You got to look out for that 555 because there could be a bounce off of there like that. And then we turned 560 into a rejection and then we continue down like that. Everyone follow me? So knowing the movement of each level, there's buyers at 555 on SPY. So 560 to 555. If we turn 560 into a rejection and we remain below it, remain below it, remain below it, yes, sellers might step in a little bit more aggressively like that. Okay. And we could retest the lows, and that's when kind of that bearish movement would continue. All right. So that is a possibility. Okay. Let's give a bullish case. Brian, what if I just want to wait for calls if I'm trading? What if I want to wait for the upside and get this big squeeze up here? What if it doesn't come back? If we get a strong break, and I really don't think personally anything big is going to happen until after he speaks, which is on Wednesday afternoon and then Thursday, Friday. If we get a break above 566, okay? If we get a break above 566 and we can turn that 566 into some type of support, all right, we can squeeze up to that 570. Okay, and 573. All right. So it's a little bit tough down here because we're in a range. I want you to look at this box. That is where SPY is right now. So if you have your charts up with me and you want to draw this little box, that is what SPY looks like. That is a range. That is tough. You got to wait for the range to either break, and then you can say, oh, we're a free fall now. Right? There's no stopping it. Kind of like what happened over here. Okay. Kind of like what happened here. We broke 570 and just free fall down to 551. So if we remain in this range back and forth, back and forth, back and forth, right, trade the range. But if we can't get back above these higher ends of the levels, 565, and we struggle up here, struggle up here, struggle up here, it can start fading and coming back down. And that's why I'm saying that the bearish momentum still could continue, which is crazy for some folks to think about, that we still haven't really recovered. Why aren't people buying the dip? Right? So that's how you trade this type of sentiment. You've got to be a little bit more patient. You have to trade the range of what it's in or wait until you see momentum in one direction or the other. Okay? All right. Everybody cool? Let me check the chat. One. Awesome. All right. So there's SPY. Okay. So if you're a long term, just keep buying the dip, and you're just comfortable with waiting until it happens. Right. But keep your risk tight. But I think personally, we could recover if we start to base above 560 and we start to base above 555. This is a pretty decent bullish sign, bullish signal right here. If we break back above and bulls start stepping back in and we start getting a candle like that. Okay. That's a possibility. But I'm still worried about these overhead levels that have now turned into resistance. Right there, 567, 566, could reject there and come back down. It's wild right now. So respect that we have changed trend. Respect that every pop is getting shorted. And if you buy the dip, if you're trading calls, might need to take your profit a little bit earlier. Okay. So there's SPY. QQQ. Same type of sentiment here. You see what I've gotten drawn on my charts? I've got this little rising wedge drawn. And when I see a rising wedge, I'm just looking for strength out of each direction. Okay. because this pop on Friday was a pop and a grind into a channel. That's not very strong. That's just a recovery, offloading puts, offloading short positions into a Friday, and then we gap up and then just grind and grind and grind and grind and grind right up into grabbing liquidity, as we call it. It just wanted to, market makers are pushing it back up into that level. Very similar to what happened here, right? Gapped up right there, pushed into that level. And on that day, we rejected 481. And then we continued to form lower highs. So is that the same scenario with this big gap right here? I'm pretty sure, but we don't know how far it's going to push up before it retraces. It could retrace here, or it could push all the way up and then have a big fall back down. So I'm ready for either one. My mindset personally is still on the downside because I'm trading the direction of the trend. So if I trade calls or we trade calls in the community this week, right, I'll be either taking a small scalp for this move up into this gap. So from 580, break of 481 for potentially a big squeeze here to grab liquidity at 488. So that's a really nice move, right? And then all the bulls are saying, we're back, we're back, we're back, we're back. Are we yet? Or are we just going up and creating lower highs to take a big fall right back down? Okay. And then maybe bears get trapped down here and we have a triple bottom. Okay. And then that's when we squeeze. So all these things are preparing, in my opinion, for some type of big short squeeze, but we don't know where the bottom is yet, especially with a gap up like this. So we're prepared for anything this week. We'll see what Fed Powell has on the docket for us on Wednesday, but still got to watch the news about what Trump's doing on the tariffs. All right. So levels again, for those that didn't hear, do you see this clear rejection channel? There's QQQ. It's in a channel. Every time we're in a channel, okay, the stock typically breaks back below a channel. This is a clear downtrend into different channels. All right. Here was QQQ before. Here was QQQ previously. Here was QQQ previously before there. It was in a small channel right here. So do you see that we have to break back above those channel levels, which is right around 482, to squeeze back into the top of the channel, and then you can take it up. Okay. So I actually would love a big break if you decide to trade the upside. I'd love a big candle push up into that gap and then wait for the retracement to see where we stop, if that is the case. I don't really like that trade personally. I know y'all like, some folks like calls. They only trade the upside. They only like the upside, but I trade risk to reward. That means I don't care what direction it's going. How much risk do I have in the trade if I'm trading? For those that are not in the community, haven't taken our boot camp, don't know what the hell I'm talking about, I'll draw it out for you. If you enter calls right here and we push, your reward is like that. Your risk is like that. That means, have you ever been in a upside position in the morning and you're like, we're green. And then out of nowhere, a big red candle comes in like that because you didn't know there was data. You didn't know there was news. You didn't know there was tariffs on the deck. You didn't even look at a chart. You just saw that we were green. That's what I'm talking about, risk to reward, because the trade was down here like that, entering closer to 470, 468, 472. That's the call entry level. Do you see how if I entered here, I have very small risk because I can see where buyers are right there, right there, right there, right there, right there, right there. So if you ever ask me, Brian, why did you play puts today? For those that ever wonder, I'm trading risk to reward. So if I don't feel comfortable based on my trading style, you have to develop your own trading style as you get more comfortable in the markets. Okay. You can be a momentum trader. That means whatever direction we're going, you're just going to trade that momentum and you're going to capture that move. But another person could be waiting for that whole move to happen to get up to their level to where they can control their risk. Because look up here, you're trading right into that resistance level of 490 to 492. So someone might wait to get all the way up here just so they can see how it reacts. And then their risk looks like this, right back down. Do you see how small the risk is? Because you can see what was at that level. So trading is different than long-term investing. When you see a trader maybe going both directions and you're like, how in the world they trade puts today? Or how in the world did they trade calls today? The clear direction was up. The clear direction was down. You can make money either way. Doesn't really matter. It's based on your trading style. Okay. Everybody cool with that? Can you give me a 1 in the channel? Does that help for my newer folks? If you're in my community and I've taught you before, you understand this and you have felt what it feels like to be on either side of the trade. You've maybe traded a call. You've maybe traded a put. You know what grinding action looks like. You know what a big fall looks like and you win. Right. So it all depends on once you get into the game about how that feels. If you are trading more specifically, long-term investing, I stay on a weekly time frame and just look to buy a correction and then wait to buy a crash and then wait to buy an ultimate recession. It's very, very simple. Okay. All right. Let me check chat. Just invest my money, Dr. B. I gotta be at 10 a.m. meetings. I've been asked that before many a times. It's like, yo, just take my money and invest. Seriously. I get it too. I get it. Like folks are in general, just like a quick interlude. I get that folks may not have the time. It's like, man, this is a lot. Like, I don't have time to watch the charts. What if I miss a level? Like, what if I miss the dip and I'm not able to, buy it exactly where you said to buy it? That is okay. That is perfectly fine. Why you're on here, in my opinion, is to learn why something happens. Because I don't have to look at a chart once I've looked at it over the weekend. If I wasn't in live trading or if I wasn't, trading actively or anything, and I just charted and I was able to just look at Google Finance, oh, SPY is up, right? SPY is at 570. Oh, I know where that level is on the chart. That's in that gap fill, right? So I just get my levels and I'm able to just look at the price of where things are. Oh, Tesla, it needs to get above 250. Tesla gets above 250, it's going to go to that gap fill of 260. It's like, man, how does he know that? I just chart on the weekends and then I can just relax and look at my levels on a price if I'm out and about and just look, right? And depending on what I want to do at those levels, you have the objective or, the decision to make about, do I trade it? Do I buy long-term shares? What do I do? Right. And that comes with time about what to do with those things. And that's all I'm trying to get people to understand. All right. All right. So let me give you some trade ideas that I like. My best trade idea would be waiting for a pullback. My best trade idea on Monday or Tuesday is if we could scalp these puts on QQQ or SPY, that'd be wonderful. That's my top setup typically, is a breakdown of a trend. I am usually never hesitant on that trade, and it breaks trend and it wants to come down into this gap. So if I can scalp that Monday or Tuesday, if it presents itself, that would be my kind of number one trade idea, to scalp something before FOMC. Now, when it gets down here, I'm going to reconsider potentially calls again, because if we hold up this level, like I said, and the chart looks the same, right? SPY, QQQ. If we get back down here at these bottom ends of the ranges, that might, for me, be a signal to say, hey, maybe it's time to consider those April 17th, those June 20th, because we've passed CPI, we've gotten through FOMC, and maybe now's the time that since all the data and the interest rate decision is out of the way, we can freely maybe go into April and June and summertime as a little bullish momentum. So that is my overall idea, is not to really short much longer. That means puts much longer. As much as I love them, I don't think personally there's going to be much more the more we consolidate down in this range. Okay. We've got to clear these lows down here again. So like Ben, you say in the community, man, QQQ broke new lows. We got to clear 466. If we clear 466, then we're just tumbling again down to 460. So as long as we remain in this range, I'm a little bit more biased on the bullish side. It's just about entries. Okay. Okay. So here's how it would look again. Repeat one more time for folks, just in case you're charting with me. It would look like that. Maybe we can get that before the FOMC, scalp a little bit of puts, a little bit of fear going into that data. And then maybe depending on how we react, we start to get some bullish momentum. That could start happening depending on what Fed Powell says. If he says we're good to go, if everything's good, if the tariffs are paused again, whatever is going to happen. I don't know. They're going to manipulate it anyways. Then that could happen. Okay. I'm not saying it's going to happen in one big candle, but we could get some type of bullish squeeze like that back up. Okay. All right. That's more of a day trading idea. Now, Brian, what's your big idea? Where do you see, even if we make a bullish move back up, okay? And a lot of people like to, remain on the Qs, okay? QQQ. I want you to pay attention to if you miss the upside, okay? If you're like, God dang it, we're squeezing. Like, should have bought that dip at 465 and we're all the way back up at 500. Please, the selling could still not be over. It's like, man, are you kidding me? No, I'm not kidding you. Okay. You still got to interact with this level again. So even if we push back up into that level like that, that is a prime level that bears are highly willing to short that level again. Come right back down. You see that? Just like I've been preparing people for, hey, when this selling comes in, it's going to be massive. It's going to be massive. It's giving back all the election gains plus some. That could be another measured move for lower like that. And look where it takes us, right into these lower levels where we were trying to retest down in this area. Okay. So I want you to have that in the back of your mind as we're recovering, which we should off this correction territory. It happened last time the same way in 2022. Okay. So I want you to look at this double top right here on 2022. Okay. Right there, 400, right there, 400 started tumbling very quickly. Guess how much we corrected right there? Roughly 15, 16%. Okay. Pretty drastic. Okay. And we went down to 20%. And then we came right back up and everyone thought we were back. Nope. Lower high. And guess where it rejected? Right here at the top. Does that not look like the same exact chart? Do you see that resistance that used to be support right here? Give me a 3 in the chat if you see this area, those supports, and then we come back up into it and we still can't reach it and we go lower. That to me would finally signal that we are in a 2022 similar 2025 bear market. Okay. So right now we're just in correction. It is not a bear market. Some may be calling it that, but we have not hit bear market correction. Crash territory just yet. But if we recover and we reject, look at the chart. I want you to look at the chart, double top, break of that level, 502, 500, push back up into it. Can't get back up higher. Can't get back up higher. I don't care if we come back into 510, 512. We could push up into this level. and still it would be a lower high. And come crashing right back down. Threes in the chat. Threes in the chat. Does everyone understand? You may not agree, but do you understand? Okay, everybody understand. Put a 3 in the chat if you can. That's what I mean. Is that now that you see the charts, you better understand when something recovers and then it just goes lower a month later. You're like, what was the point of all that? It was just a dead cat bounce recovery. It was natural. Buyer stepped in. Okay. So that is what most big investors are looking at. Even the Tom Lees, the analysts, buy this dip, buy this dip, buy this dip. But we've got to really get back above 520 on the Qs, 515, 520 on the Qs to really kind of take off like this again to all-time highs. All right, we've got a long way to go for bulls to really get back full control. Okay. So that's all I'm saying is because you see how drastic the selling pressure can get when people get fearful. But we're in a buy zone. And you can't dismiss that we're in a buy zone. So as much as you want it to go lower and keep playing puts, or you want to buy the dip lower, whatever, we could have a nice little bounce recovery and then reject again. Okay. Now, let me give you a bullish case of what might happen, what I'm really waiting on. Okay. Would be something like this. If we push back up in this 502, it's like, Brian, what would signal that it's like ready to go? Another indication would be if we pull back and we form a higher low. That means here's how it would look. If we push up into this level like that, and whether you trade calls or you bought the dip or whatever, you're green. Cool. And we pull back and we form a higher low right there, the trend would look like this. Very similar to what happened here. You see, we pushed, recovered, dropped, held a higher low, and then we continued. Does everyone see that? That would be the area which would probably be roughly around 485. If we hold 485 and we pull back, then we can go back. So it's stair-stepping our way up, and that's why it's a very pivotal point. So if you're seeing a lot of YouTube videos or just general folks talking, I don't care who you watch, and they're trying to predict what something's going to happen, you've got to have both cases in mind. So you got to protect your downside. And then also, what if this is the dip? Just like everyone else was saying over here, oh man, we're crashing. Well, this is a little bit different because we got some catalysts. We've got inflation. We got folks, we got $36 trillion of US debt. We've got a lot of uncertainty that's coming in. So it's a little bit different than when we had the administration before and everyone was like, he's not going to do nothing right now. So we're just going to keep our money in the market and we control everything. Right? Cool. So I hopefully you saw that comparison to 2022. I'll do one final thing and I'll go to some of the stocks. Please put the stocks down below that you want me to chart and some of my top watches this week for some trade ideas. Okay. So before this big move even happens, we've got to get through 485 and 480. So right now, this is red. I'm just giving you a bigger idea over maybe the month of March or something like that, or maybe even into April. We could push all back into summer, come all the way back up here into summertime, and then, fall time, how that is. All right. Let's see here. Let's go into the moving averages, and I want you to look at, let me remove some of these, and let me go to the 200-day. Okay. Once you look at this orange line on a, let's see, where is it? Daily? Where's 2022? Oh, right here. Okay. So another indication of how we could enter into a bear market, or we got to be careful about the pop that happens this week, next week, into April timeframe, taxes, summertime, is that what do we do at this 200-day moving average? Okay, on a daily. So do you see? Here's 2022 again. We enter in, we immediately fall. We break the 200-day moving average on a daily, and then we pop back up into it a couple of times, and we turn it into a rejection, and it flows down below the 200-day all the way through the end of 2022. Let me go over to what's happening right now. Look at that. We have fallen below the 200-day, and that 200-day can move up a little bit with the market. So it might move up to 502, and that's right at that level that we charted. So if I want to move this to right here, that could be an interesting rejection point at 493. Everybody see that? So even if, you're like, man, that's a big move, 479 to 493, I could trade calls up to that. Yes, but you got to be mindful that that is a very big level, 200 daily moving average, where in 2022, it was a major rejection for lower. Push back up into it, reject lower. This was from 363 all the way down to 312. 50 points on the Qs for lower. You see it? Can't deny a chart. That's why I'm saying the charts don't lie. So I could come on here and just say, hey, this is going down lower. And you're like, what if it's a big green week and we go up higher? I'm like, okay, that's fine. But we're significantly below the 200-day moving average. Now, you might say, well, what about over here? We didn't break below the 200-day on a daily. You see how we held it, held it, held it, held it above. This is the first time we've really broken it, right? So that is why this is different than before. Before, the pullbacks were big runs to new all-time highs, okay? So that's what I'm really watching to signal, hey, I'm ready to trade calls. Hey, I'm ready to hold long, like call swing positions, right? Because right now, what we're doing in the community, we may hold some, like for those that are in our community inside of leverage, we had a roughly 100+% NVIDIA swing call, okay? And we called it at 107. And it went to right to our target at 120, 121. Now, some people took it out earlier, later, didn't matter, okay? But these are short swings that are maybe a couple of days or whatever, that we could go up and come right back down, go up, come right back down. It's very volatile, all right? So I'm going a little bit more in depth, okay, CRM. I'm going a little bit more in depth for those that are like, Brian, you keep reiterating the point, because I want you to see how myself or anyone else analyzes the sentiment of the market. So when you come into a week, you know a bigger time frame of why we're still not yet ready. Because on a shorter time frame, yeah, we could push up and recover and fill all these gaps, and we're back up to 500. Great, cool. But it's still not out of the water yet to really start swinging into new highs. And we'll know when that happens when we get back above 503, 500, and we'll see what we do at 500. Okay. 493 right there. Okay. All right. IWM, small caps. Small caps do not do very well when interest rates are not being cut. As you can see, if you were a small cap company, okay, it's given back the 2021 highs where we were when we fell in 2022. So that's a little concerning that, it's given that back, but it's not out of the water yet that it still can't go higher, because we are still forming technically higher lows, but we have broken back below that 220 level roughly. Okay. Here's that level right there, 220. We broken back below it. Cool. Is this the dip? Maybe. It's a great area. Right? 197 to 200 is a buy area for IWM. It is a very, very, very heavy area here for IWM. Okay. So it's also on the 200-day moving average on a weekly, but on a daily, it is significantly below. So again, same sentiment. We could pop right back up into it and then form another lower high and reject all the way back down again. Okay. I want you to look at this as well. Let's look at the top option statistics. Look how much put ratio is on the on IWM. There's the put side. There's the call side. Look how many put ratios are on this side still. Okay. So that's telling me again that every pop is getting shorted, that every time you try to trade up in the calls, it may move. You may make money on the scalps, but it's really not squeezing like it should. There's not a lot of bullish momentum, but there were some, and I'll show you what those were. All right. I think Powell's got to come out with some very, very dovish, bullish news. And he may. He may. Okay. All right. Your levels on IWM this week. 208 will be my top target. 208 and then 206 roughly. Okay, just that gap fill, 206. Okay. So we got to clear above really 208 and 210 would be like that really final like breakthrough level would be 210. That's where bulls would really step back in, but this could be a nice little pullback again. And then we squeeze back up into that level. And then we can react around there. Okay. So it's in a range, chopping. It could squeeze up. It could squeeze down. All right. If you want to trade down, I want you to mark on your charts that trend line there. And I want you to look for a break back below 200. Okay. Maybe 201, but 200. And the reason I got that is because of this right here. 201 came down to 199 and 198. Right here, rejected 201.50 roughly, came down. And then that rejection right there, 201.44 again, and came down. So watch for that breakdown like that. And that could be a catalyst to take it lower. All right. All right. If it holds up 203 and gets above 203, then we could get a push up into 206, which would be a nice little bullish push. All right, let's go into several stocks. I'm going to Shalita's first, CRM. I'm keeping track of time too because we're already an hour in. So I'm going to start wrapping this up with some stocks. Make sure you get your stocks in, and then I'll leave you be. All right, CRM. I'm going to look at on a weekly time frame. It's in a nice area, Shalita. It may just need some help from like SPY, but it's in a really nice area for a dip buy opportunity. And I'm looking at this area right here. I'm really not a big fan of this weekly candle. Right? Do you see that it's kind of split and different? It pushed up to 285, came back to 279, and then pushed down into 270 and came back up to 279 roughly. So it's holding this level very similar to this, but it's more of a kind of breakout trade. You would just need a break of 280. I'd say just 290 to be confirming. And maybe if you see a hold above 280, but I'd probably rather see this pull back first and then push up into it, or it's just going to push right up into it like that. And then if that gap's still not filled, it might reject right back down. So I trade at the bottom of the range, like closer to 270. And if you can scalp some puts, maybe consider at the top of this range, close to like 285, 290. There's still some resistance up in here. So everything's in kind of the middle of a range right now. There's a couple things that are decent, but it's kind of just waiting on one direction to choose which way it's going. Nothing looks super, super good, but I like it on a bigger time frame, Shalita. My only concern is where the market is going. So everything looks good for like, man, this is sitting in super support. Like, where is SPY and QQQ going? Are they going to fade? And then we break another new low, and then CRM's fill in this gap like that, right? So you just really need to hold up 270. I'd watch that 270. Just watch the reaction. There's the 200 day right there, right above 290. So that could be a good indication. So could push up into that 200 day on a daily, but it's underneath it. All right. Anything else? Let's see. Okay, keep rolling. I'll discuss Tesla and Nvidia. Those are other big ones for folks this week. What are they going to do? Everything has the same setup. Okay. Tesla is pretty nice right now because everyone's looking at 250, 255. Okay. 250, 255. And I want to show you the reasoning why is because this looks almost identical to what I pointed out last week on this kind of weak potential bearish flag that could be forming. Okay. So if I see something out of here at 250, 255, and the market starts getting weak and we start seeing something like that, y'all remember last week when I was talking about Inside of Leverage University when we were in live trading and I said, hey, Amazon's looking like this, Google's looking like this, and we wake up the next morning and it identically happens. Here it is right here. And you wake up in the morning, there's that break. Everyone see that? So you got to be mindful of these kind of little grinds back up and grinds back up and grinds back up into a resistance, and then they short it, right? What does this Tesla look like right there? So I know there's a gap. So if it breaks above 250, it could push up into 255 and push up into 260. Yep, I get that. So if you're trading the upside and you're like, man, we're oversold, cool, scalp it. That's fine. If you trade Tesla, that's great. But please be mindful of the potential of this break of trend. So draw that on your charts. It breaks the trend back underneath 250. We fell again. It could get pretty aggressive. And typically you retest the low. So it could fall from roughly 250 back down to 230 and then back down to 220. Okay. If I show you option statistics, people got some calls, people got some puts. Either way. I think there was some bullish news on Tesla recently. I forgot what he said. Something Elon or Tesla said they were going to do something. But yeah, we shall see. I think 250 is a good area to buy. I thought 220, anywhere near 200 was a good buy zone. It's really just where this 200 day comes back into play. So my big level on watching a recovery for Tesla would be roughly around 270 and then 300. Those are my big areas of watching what it does at those areas. 270 and 300. And for those that don't know, that's why right there. Right, these previous resistances that came all the way back down to 179. And then you got 300 that rejected right here all the way back down. So watching what it does, if it reclaims those levels, we're back off to the races. And the Tesla bulls will be excited. So I think it's a decent dip buy, but no one knows if this is the bottom. That's all I'm saying. Decent dip buy. I still like Tesla closer to this 170, 160 level. If we can get some massive rejection again, that'd be beautiful. Like that. Absolutely wonderful. All right. Amazon. Amazon, I absolutely love the chart. I know it looks kind of iffy right here, but I want you to look at this level of Amazon. It's pretty clear at 200. So Amazon has been my top watch for the last couple of trading days, and I still did not take the trade. I don't know why. Um, just trading psychology. So I'm really watching Amazon because you see Amazon on a daily is close to this 200-day moving average. It's already pushed back up into it. So I want to see what it does at 200. If we can get some rejections, Amazon could be a really nice trade here because we can control this 200 and 198 level, and it could look just like this. Okay. So Amazon is a top watch this week for me. As it is still fairly weak, I'm just going to be watching the reactions around 198 and 200. If we get a break above 202, then I'm going to kind of chill on the brakes on puts. Okay. We get a break above 202, we could push up, and the market's probably going to be pushing as well. So I mean, watching SPY, QQQ, what they're doing at their levels, and then watching my correlative stocks that I'll be trading or looking at this week. So Amazon, please keep on your top watch as a, decently nice level right there at 200, and it's pushing right back up into it again. And could this be another just weak little consolidation, bear flag again, knockdown again? Very similar to this one right there, right there. Okay. So Amazon, free game for you. If you're not in live trading, I highly recommend that if I'm giving this free game that you join, because you're probably going to make the money back anyways. So give you some contracts to look at. Amazon, if you do know what you're doing or you're trading, maybe take a look at the 195 puts. Those will probably be the safest. 190s could move depending on if it stays weak underneath 200. So my target, if we do get super weak, would be back to 190. But 195s, 197.5s, anything in the money right there. I know they're pricey for some folks, but if you have a larger account, you can stomach it. Maybe even the 192.5s could move. But those are weekly contracts. If you want to go further, you can take a week and look at maybe 195s for next week, spend a little bit more money if you'd like. But that is more so a kind of a day trade scalp idea than kind of holding it per se. Right. So target back down to 193, and then final target back down to 190. Now, a big target, if the market gets super weak and the trade idea plays out, there's more gap to fill. And I don't think people realize that there's a gap right there. It's like, oh man, I didn't even see that. So if we break below 190, there's nothing but a free fall. That's why I love this chart so much, is that there is a gap all the way down to 180. You see that gap right there just presented? Right there that has not filled. Okay. The bottom of that gap would be down to 185. So this could be just another consolidation, bear flag all the way down to 185. So here's some free game, probably my top watch. Depending on what SPY and QQQ and what Powell says, don't just jump in it freely, but that is a possibility for sure, is we could be right back to 190 minimally on Amazon if we continue to show weakness at 200. All right. Put a 5 in the chat if you like it. That's good. 5 in the chat. Palantir. Palantir is trading in a really nice range here. Okay. You see, Palantir is significantly above its 200-day, but the 200-day is typically a target. Okay. On a daily. So Palantir still has room, in my opinion, all the way back down to the mid 50s and the 60s. Okay. So how can you trade Palantir this week? Palantir's been treating us really nicely on a day trade because I can control the levels. That means that Palantir is sitting right here at a nice support, and I clearly see big resistance levels that are above, that are right here at 90, at 92. And then if we get strong in the market, there is this big 100 level that it may want to push back up into. Okay. So, idea for Palantir that I see is that there's a little bit of inverse head and shoulders because it still is strong. All right. It's a little ugly here, but if Palantir continues to hold 80, this is technically a higher low. Okay. So on Friday, I was trying to short Palantir, and people may be like, I don't know why he would do that. It's because I trade risk to reward, and Palantir was sitting right here at 83 because we rejected it the day before. We took this trade right here on Palantir for 148%. So in the morning, it popped up into this level at 84. There was some news. I was waiting on even 85, and then it turned 85 into a support. So that stopped me out, and I had to get out. So if we break back below 85, that's where our tumble, maybe I'm a day early, like I say in the community. Maybe I was a day early. But if we break back below 85, the market gets weak. It comes back to 83. And then wherever it does at 83, it could start falling like that again. Okay. So that would be my idea on Palantir, is wait for a break back below 85 would be the ideal signal. Or if you're looking for puts, maybe, Monday, Tuesday would be my idea for puts, would be waiting if we get back into 90 and 89 up here. Okay. So it would look something like this. That's kind of your put idea. Okay. Call idea. I think it's just really close to this top end range. There's a resistance at 88. There's resistance at 87. There's bigger resistance at 90. So it's sitting at 86, 87 right now. So it's kind of really close to this area at the top. So I would only like to trade calls ideally on Palantir if it got back to 80 and 79 and see what it does there. Right. And then trade that back up. Everyone see that? That's my Palantir idea. So watch 85, what it does below 85. You got down to 80. Okay. So for those that were in that trade with me on Friday, maybe it was a day earlier and the same trade could play out pretty decently. You see here, it's a little bit oversold, or excuse me, overbought on a 15-minute, which is a day trade signal. Overbought, double top overbought, and could come tumbling right down back to 82 and then right back down to 80. All right. Let's go to NVIDIA. NVIDIA has a conference this week, 17th through the 21st, the GTC conference. So that is why you're seeing NVIDIA relatively strong comparative to everything else. It's the hype around NVIDIA. It's buy the rumor, sell the news, in my opinion. So my top end level on NVIDIA is really this kind of 200-day if the market gets strong. Because NVIDIA in my opinion, had a little grind action up. You see how it popped, grinded and chopped up, popped, grinded and chopped up. So it's not really a big, push move. It's more of a grind move. And when you have those grind moves, you can get slammed right back down. Okay. So I'm just waiting on NVIDIA to show me something. Either it gets back underneath 120 and we can scalp it maybe down to 115. Okay. Or if we get strong in 122, 123, and you see NVIDIA pushing and you like NVIDIA and you want to push it up, cool. Trade calls up into 125 and then ultimately up close to that 128, 127 level. Okay. So our NVIDIA call trade worked out very well. If you're still holding that, congrats. If you got out, still congrats, right? Because I'm still waiting personally for, just like I said last time, if y'all remember from me last time I discussed in the video, if you missed this dip, remember last time it went all the way down to 113 and people were like, you were crazy if you don't buy 113 dip, and you rode it all the way back up. Well, it just gave back the whole move to come lower. So we're still in this lower high channel. So even if we pop up to there again, I'm not saying that I'm right. I'm just saying that it's still forming lower highs and we could reject all the way back down to those lows. Okay. So great dip buy opportunity if you bought NVIDIA at 104, 107, if you bought some shares, if you bought some calls, please have targets on the way up. We are still not out of the water yet. You still got 128 and you still got into the 130s. Okay. And there's still these gaps down below that still have not been filled. All right. So I think NVIDIA could be a really nice short idea if it pushes up higher. Because I'd absolutely love that big, buy the rumor. Everybody thinks, going into the event, it's great, cool. Jung speaks and then he speaks and then right back down. Okay. So my area I'm going to be watching is this 112 area if we get it again. If we get 112 and we hold up 112, 113, that could be a more confirming level because we've touched it multiple times. Okay. Now, y'all know my big level is still down here into the 90s. Still down here into the low 90s and then down here potentially in the 70s. I want you to look at this chart again. How is that possible? Look at the bigger time frame. We've got to reclaim back above 141 to get extremely bullish back on NVIDIA. And this could be a buy area that you caught it. Great. Right? But what if you don't protect and you're not ready to buy this dip? That's all I'm saying. So I bought a little bit of NVIDIA here at 104. However, I'm waiting still for my bigger ad down into these levels. Okay. That's just me. Do your own thing. I'm just showing you charts. All right. And charting has been pretty on point lately. It's been pretty on point. It might take a while for the idea to play out and I look crazy or someone looks crazy, but just looking at the charts. Cool. Again, look at that daily 200. Broke below the daily 200. We got to clear back above it. That daily 200 is sitting right at 127, 128. What do we do at that daily 200? Push back up into 128 this week. What do we do at it? Do we reject it again or we get back above? That daily 200 is right there if you need to mark it on your charts. Okay. Once you look at NVIDIA again on a daily chart, when's the last time it broke below the daily 200 and held below? Okay. That was a decent break, but really wasn't strong. Reclaimed it pretty quickly and we went up. But do you see it struggling at this level? Broke back up, broke back down below, broke back up, maybe breaks down below, holds below, and then keeps coming lower. We never really broke below it. It's the first time. All right. We have hit that mark. How does the option stats look on Palantir? Okay. Put heavy still. Put heavy still. I think just because personally Palantir we got to think Palantir, let's just call it a community play. Okay. If you've been inside of leverage, we talked about Palantir at $15, $16, $17. Okay. That is where most of my community members' average costs are. Okay. And if you're not a part of the community, I just wanted to show you here really quick while I'm going through it. Go into our leaps and shares and go all the way back to 20. Let's see. Ionic, Palantir, James called Ionic, 100 shares. Shalita, congrats. She bought her 50 shares of Ionic when we got that at $7. There's Ionic. We called it 10 when everyone was talking about Ionic. Okay, that was back in October of 2024. And then Palantir all the way back up here. And I'm only showing you this for my new folks because you can use the charts as a long-term investor. You don't have to use the charts just as a technical day trade. I'm constantly looking at the bigger time frames. Constantly. All right. So I don't know where it is. Google it or put it in here. Live trading. Old. Oh, there it is. May 2023. Easy Money Plays, Palantir, May 2023. Yeah. That's when we were calling Palantir smaller plays. Crazy. Palantir, I was doing analysis there in 2023. There you go. SAS, IWM, leaders. Palantir was in this piece. C3AI hadn't really doing much, a little bit of something. Google, and then Palantir is now all the way, at the top of the food chain. Oh, there it is. Long-term hold buying share levels. July 2023, Palantir start buying at $14, $15, and $17. Google, buy at 116 to 118. SoFi, still struggling a little bit, but it still could be that buy range right now. All right. Just wanted to show that for everybody. All right. So why I say that is because my whole point is showing that is Palantir is still severely overbought on a higher time frame. Not saying it's not a solid company, but if I look on a weekly time frame, it's still overbought and it needs to cool off. I mean, on a monthly, this RSI is at 89. On a weekly, this RSI is now just broken back below 70. But that is when you can see a company pretty much give back all the gains just to retest the high again, depending on what type of market we're in. So Palantir is definitely in a buy zone. I mean, we see this bullish candle off of here, right, of 80, 80, 80, 80. There's the earnings right there. Right off 80, went to 115, crazy. So this is a buy area for Palantir, but it is still struggling in this zone, consolidating. 80 to 90, 80 to 90. If it breaks above 90, 91, then we can go back to 100 and see what we do at 100. And do we go back to all-time highs or do we reject 100? So short term, I like it for scalping in this range because we can control the level, Shalita. Nice range on Palantir, 90, 80, and then in these in-betweens, 85s. Does that help everybody? I'm kind of just assuming some questions from everybody. Let's look over crypto really quick. Bitcoin still forming lower highs here on this downtrend, slowly downtrending to that 76, which it already hit. That's that 61.8% retracement. And then we're still looking for 65 roughly, and then ultimately 72. 70 to 72 is kind of that area where I really think personally is trying to get back to. As you see, rejecting lower highs. It's trying to hold up this 80. And then if it breaks below for whatever reason, it's trying to hit that 70 to 72 range. But you can see a lot of buyers started to still stack right here, trying to hold that level up. All right. But got to understand that it's still pulling back slowly into buy areas, but we don't know how low it's going to go. All right. Could it be on this trend? Maybe. It could be this trend right there. I still like a lot of these areas as buy areas. I think Ethereum is in definitely a interesting zone, I should say. Some people believe in Ethereum. Some people are like, I'm offloading this thing. It didn't really move like I wanted it to, but it is definitely back into that exact buy area we talked about, which is around 1800. The levels don't lie right there at those buyers, 1800, but it has broken trends. So does it come down into these lower ends of the range back to 1000, right? To retest this 1400 to 1500. Okay. So again, prepare for lower, add once, prepare for twice, load up 3 times. All right. Talk about some long terms. I still got DG on watch. It's still not giving me very much strength off of this level on a monthly, but it's consolidating right at this interesting level. So keep DG on your watch. For leaps, long-term shares, I think it's at a decent level. But again, anytime something is in a downtrend, trying to time the bottom, got to be prepared for a couple of ads. But I do think DG $60 to $70 is a decent buy area, right? And be prepared for maybe 50. Okay. So here's Dollar General. For Dollar General to really pick up some steam, it's got to have some decent earnings, which it does have earnings on. It had earnings last week, and it was kind of lackluster. I think it popped on earnings, something. I didn't read their earnings report, but not much of a reaction just yet, but it didn't dive. So still holding up fairly decently. All right. But I like the area. If you look on a monthly time frame, can't deny that Dollar General will recover in a couple years. So we shall see. Target. I don't care what your views are. You know, I'm not here to talk political views. I'm just here to look at the charts. So Target, based off of this candle and this downtrend, I'd probably look at roughly around $80. Roughly around $80 for a better buy zone, but 100 to 98 could hold up. Okay. So Target could be another opportunity for a potential bigger swing type of leap opportunity, or maybe if you're just more comfortable buying shares, um, hey, folks not stopping. You may think folks stop shopping at Target, but it's just consumer spending, right? Like people are going to Walmart, people are trying to order things cheaper at Costco and get things in bulk, shop less. I don't need this anymore, whatever it might be. That's just consumer spending. Once all that relieves itself in the next couple of years, whenever it does, these consumer spending places, people will go back shopping at Target and do whatever they do. Happens every single time. So Dollar General, Target, keep your eye on some of these companies that have been hit simply because the consumers' pockets are a little bit shy right now. Okay. So Target, keep that on your watch list for long-term shares. If you do, want to take a look at it, I think it's a decent opportunity, but I would probably wait a little bit longer just in case we go into some type of bear market or the market corrects even more. Target would probably pull down into that 80 range. Okay. It is in significantly oversold range on a 4-hour time frame. So it could have a little bit of relief. As you can see, it's in 20s on a daily, and it's right in a buy zone. So right in a buy zone, that could be a decent little short swing trade, potentially, back to the upside. I'd probably look at like June contracts, maybe back to school shopping, summer shopping, something. I just don't know if I trust it. And contracts a little pricey for that. For Target, I can get better value on something, but yeah, not a bad area. Not a bad area on Target as well. Kind of a little mini hammer candle on a daily right there as well. So I think Target could at least retrace back to, it's kind of like the UPS trade. It took a minute to retrace back up, but you see UPS came down. People thought UPS, oh man, that's crap. No one's whatever. But it slowly retraced, right? It took a month, but it went back to 124 from 107. I think the Target trade could do roughly the same thing. Roughly the same thing right in that area, back to 120. So how long it'll take to do it, not sure, can't tell you. But yeah, Maybe stop loss below 100 or 98. Anything else from anybody? Anything else from anybody? Yeah, you're so welcome. Nothing. All right, we're an hour and a half in. Just trying to give everybody as much game as possible. Just so you understand the how to analyze the sentiment of the market. If you're experienced and you're on here watching me and you see what I see, please let people know down in the comments. If you have a disagreement, that's cool too. But as you see, I'm not swayed either way. I typically just have, as I call, my head on a swivel, like, I don't know if I'm convinced yet. I don't know if I'm convinced yet. And as I say, I still need to film that video on gaps. But for those that don't know my gap strategy or you don't know about gaps, anytime I see gaps to the downside, I'm like, I don't trust it. Okay. That means that Netflix still didn't fill this gap all the way down to 700. Why do I say that? It's because Coin did the same thing. Coin did the same thing. Coin had a gap that it was not yet filled right here from 212 to 192. Right there. So while Coin was all the way up here at 300, I was like, that thing's coming back down. I don't know what it's going to be. I don't know what they're going to say. I don't know if it's going to have manipulated earnings, but that gap is going to get filled and we're going to be right back down at 188 very soon. I can't tell you when. So that is a kind of an indicator for me that if I see some type of big gap that has been created on the stock. Now, I'm not talking about stuff like all the way down here, right? I'm not saying, Netflix, you never know, 2022, right? I'm not saying Netflix is going to be back down at 200 because they have been strong. But I am saying that that gap right there to 700, because we fell from 1,000 to 850, 150 point drop in about a month. So anytime I see a close gap that is, somewhat on trajectory to hit and it's headed towards that direction, I'm prepared for that. And you know how much of Netflix is a big player. So I scan the market based off of where some of these gaps on some of these bigger stocks are, like Amazon that has more room down to 180. That will move the market. Apple. You see, Apple was looking pretty strong here. Then out of nowhere, I'm not saying don't buy this Apple dip at 200, but I'm saying also be prepared to buy Apple, like I said last week, at 190, 200, and potentially down at 170s. Okay. Because it is significantly broke down below this 200 day. We could pop all the way back up to it and then reject even further, depending on where we are heading into September, October, November. All right. Cool. All right. Give me a 10 in the chat if this was good for you. 10. I know those two numbers, but that would really help me out to let y'all know, like, hey, you're learning something. You're seeing this analysis. I've gotten good feedback from a lot of you. The kind words, I'll just give you an example. Someone said they've had 2 or 3 people they've learned from, and they jumped in our community and said, hey, like, this is the most I've actually finally figured out what's going on instead of just a signal or whatever. And that's all I can do. That's all I can do. I have a teacher bias, an educator bias, a coach bias. So I want people to understand, whether you think I'm Yappuccino or not, I want you to understand how a person gets to a conclusion, because if you don't, you're going to be required to remain someone fishing for you all the time. And we don't do that around here. You want to be able to fish for yourself. You want to be able to long-term invest. Say, hey, Brian, like, I saw this thing and I saw this company. What do you think about it? I saw their financials. They look good. They have cash on hand. I saw that they were, at this 200-day moving average, or they look bullish, or the RSI is overextended. I want you to be able to talk like that so we can have true investor conversations instead of saying, what do you think about this? Not to say that's a wrong question to ask, but that's very vague. And that's what a lot of us do. That's what I used to do. Hey, what do you think about Tesla? I don't know. What do you mean? Like, are you trying to long-term invest it? Are you trying to buy it? Are you trying to trade it? Like, I don't know. Like, what do you mean? Like, where do you buy it? it's and that's no fault of our own. None of us were necessarily taught these things. So we were just told off of emotions of you just buy off hype and people get trapped. Right. So I'm watching Warren's portfolio. I'm watching a lot of other hedge funds portfolios. I'm watching where money's moving. We're still in $36 trillion of debt. I'm watching Trump and what he's trying to do with, IRS taxes underneath the $150,000. I'm trying to see what the moves are, where the money moves are, because most folks in the United States don't understand money moves from a very high level. I don't care if you're at that level or not, but do you understand it? Because if you don't understand how the US economy is running the country underneath debt and printing money, and it's fake, and the dollar's losing value, and your home is not necessarily an investment anymore, it's just a place you're living and you're paying off the bank, unless you have a leverage strategy of investing in real estate properly, like, then we're just living, and we're under the subjection of the economy that is going to mess with everybody else's retirement. Like, it's messing with people's retirement right now. Like, imagine some of you right now that I don't know who's listening or going to be listening to this, but I'm just putting it in like a very emotional state, and I'm ending here. I'm done with the charts. I'm done with everything. So let me take this off. I want to speak to everybody really quickly. If you're willing to stay on, that's cool. If you got to go, I'm not going to preach to you. I just want you to hear me because this is serious. Imagine yourself at 65, approaching 70 years old, or whether you're trying to retire yourself at 40, 50, whatever it is. And you look at your portfolio and you're trying to manage, man, okay, I need 60,000, 70,000 to live. Okay. My house is paid off. I need to take care of kids. I need to have a little reserve just in case, the grandkids or the family needs a little bit of money. Okay. I want to do my fun. I want to travel. And you start adding up the numbers, and it's not adding up to 10, 15, 20 years of sustainability in your retirement. I'm not saying I've got that all together right now, right? Because I'm still at the third decade of life, okay? But I'm saying for those folks that have a lot of followers, a lot of clients, a lot of folks that are like, I need to figure this stuff out. That's all I'm saying, okay? So this is a wealth opportunity. This is another potential bounce. We don't know where the dip is going to go, how far it's going to go. Could it be a 2022 and we can run into 2027 where we'll be fine? I think that's where the sentiment is. I think 2027, 2028 into the next Bitcoin halving is going to be where the big turnaround is going to happen. So if you're hearing folks talk about that right now, that's what folks are preparing for. It's like no one knows where the dip is. No one knows exactly what's going to happen, but it's like it's happening. It's starting. It's transcending right now. So we good? I love y'all. Appreciate you. If you've got anything for me, please join Leverage University. Would love to have you inside. We'll be running another boot camp. Congrats to all the boot camp members. I'm just going to do it monthly for right now. Okay. We'll be running another virtual boot camp. I'll be doing an in-person boot camp at some point very soon. Okay. I'll just have to announce it and say, hey guys, 2-3 weeks or a month ahead of time, come on to Vegas, and we'd love to have you in person. We'll have some good food, chat business, entrepreneurship, connect, collaborate, party if you want to, whatever, and chart out and trade a little bit. So let me know if you're interested in that. I do check my DMs as well. So there it is on the screen. If you have any personal questions, please let me know. All right. Love you. Peace, love, and blessings. Y'all have a great one. Trade safe this week. Invest safe this week. I'll see some of y'all in live trading. Peace.